Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, national underwriter for Old Capital. And joining me today would always be Michael Becker. But again, he is on a due diligence assignment, trying to close 2 transactions right now. So we'll cut him a break this time. So sitting in the podcast, of course, James Eng, also with Old Capital. James, how are you?
Hey, Paul. Thanks for having me.
No problem. So what's going on in the Old Capital world, James?
A couple things real quick. Number one, the conference or annual conference, September 13th at AT&T Stadium. We're going to have, 500-600 investors there and have, not the entire stadium booked, but a good portion of it. And so definitely join us for that. And we'll have, listing brokers, property managers, lenders on that conference. And then we'll also have a chance for you to meet all the speakers. So definitely register for that at oldcapitalpodcast.com.
And again, who's the main speaker?
Main speaker. So wrapping up the day will be Roger Staubach. So Roger Staubach, who has definitely won a couple Super Bowl rings at the big stage on the field, but then also he's going to talk about translating that over to commercial real estate. And so how he took a firm from nothing to $700-800 million in value.
In fact, he used to sell commercial real estate when he was playing football. So we're going to talk a little bit, or listen to a little bit of his story. I think that's going to be an exciting piece of the day. So it's an all-day event. Make sure you get on an airplane, come down and see us down in Dallas. I think it'll be a fun event. So we definitely want to see and meet you if you can come down here. Also, do not forget June 21st, we're going to be up in San Jose, DoubleTree Hotel up in San Jose for one of our a meetup. Some of my friends were at the DoubleTree. It's going to be Brad Sumrock and JC Castillo. Go on to the Old Capital Podcast website, sign up for that. We're going to have 100 to 150 people at that event. And this is going to be a fun one because it's going to really talk to people who actually live in Northern California and own properties in Texas. So there you can talk to these folks and kind of figure out how they did it. Can you do it? Can you own properties outside the state? We're going to have a lot of software engineers at that conference, I feel. And we're excited to fly up and see you up in San Jose. Go to the oldcapitalpodcast.com website. Sign up for that event. James, today is a coaching and counseling session. In fact, we're going to start that as a new activity on the podcast. I think people will enjoy having 35, 40 years of my experience in multifamily. So coaching and counseling. So, execution certainty is a well-known phrase when it comes to apartment transactions. Execution certainty can be divided into 2 words. Execution, that means the carrying out or putting into effect a plan, order, or course of action. Certainty means a firm conviction that something is the case, a fact that is definitely true, or an event that is definitely going to take place. If you are a seller, you want to make sure that the buyer is definitely going to close on your apartment building. You want execution certainty, right? You and your group of investors have already agreed to sell the property, but how do you pick the right buyer? Is it only the highest offer price? Is that the way you do it? Is it the largest amount of hard earnest money paid up front? Is it the reputation of the buyer? Have they closed other transactions of similar size? Where's their capital coming from? What do you really know about the buyer and the acquisition plan? You, as the seller, want to pick the right horse. You don't want any false starts, and you don't want any buyers starting the process and dumping the deal for any reason. You have your reputation at risk to uphold within your group. The team wants to make sure that you've chosen the right buyer. Yes, the right buyer must be chosen. Hell, the equity investors have already spent their distribution. They've already internalized it, that the property is going to sell, and there's a commitment to get the property to be sold. They want to close now. They want to see their profit. They are starting to ask when are we closing, and when can I expect my money? Those proceeds are going into the next property for an exchange, or they'll buy something with the profit. Today, in most markets in the United States, the seller has the greatest control. Not enough inventory and too many buyers. So how do you, as the seller, attain as much critical information about the possible buyer, and how are they sizing up the transaction? You want to understand how the buyer is underwriting the deal. You're going through the checklist on picking the right buyer. You want to make sure that you have the most informed decision when you're choosing who the best buyer is. Did they remember to increase property taxes on the acquisition, or have they had a lender underwrite the deal? Can they get financing? So a possible way to encapsulate lots of information about the buyer is called the Buyer's Investment Form. The Buyer's Investment Form is an informational document that asks the buyers a series of questions about the transaction. The listing agent provides this form to the buying group. It gives the buyer an opportunity to show their strength and their commitment to close. It really gives the ability to speak directly to the seller. So when is it needed, and how do you complete this form? So James, at what time in the buying process would you complete this form?
So a lot of deals right now, let's say the deal gets listed today and they'll do tours. It'll be, 20, 30 days into the listing process, and then there'll be a call for offers. So call for offers typically in DFW on a deal of size, let's say 100 to 200 units, there might be 15 to 20 offers on that property. So after they receive that initial call for offers, really they're going to narrow the field down to probably the top 5 typically. And so of that top 5, they're going to send this form to you. So what we're going to go through today is really the detailed that you're going to need to provide to the seller and listing broker, and how to present yourself correctly in front of them, so that not only you're not standing alone solely based on price, but you're also looking at the entire deal and be able to present not only your LOI, but also all the different aspects of your team. And so really it's broken out into 4 parts, this form. And today we're going to go through all 4. So let's get started.
Sounds great. So let's kind of talk a little bit about just the initial questions on the buyer's form. Again, we're going to do kind of a high level. We're not going to really tell you the answers, what you should be saying, but we're just going to give you some ideas of what possible answers could be on these type of transactions. The seller really wants to know a little bit more about you. So, how many units do you currently own? How do you answer that one, James?
So a lot of people will put together a resume, and not only their resume, but anybody else on the transaction. What properties do they own? So for example, we had a deal in Irving earlier this year, and the listing broker was very comfortable awarding the deal to a potential buyer because that buyer had over 500 units in Irving already. And so having properties in that submarket, even though you might be out in California, shows that you have closed, you have managed the property, and that you have the potential to close this next property. And so the best thing to present is really a list of properties that you currently are already invested in. And so if you yourself are a first-time buyer, it is advantageous for you to partner with somebody on these transactions so that you can present the group as one and say, we have closed, let's say 2,000 or 3,000 units in DFW or whatever market you're looking at purchasing in.
So additional questions on that. Can you provide references for your recent transactions? What does that mean?
So a lot of buyers, once they've closed the transaction, if it went very smoothly, they will reach out to the listing brokers or even the seller sometimes to ask for a letter of reference or a letter of recommendation. And these help the seller assess, the credibility and also the ease of the transaction. So not until you get into a transaction with a person do you really find out sort of what's under the hood on these properties and what you're going to get. And a lot of times between the buyer and seller, there's a lot of things that are spelled out in the contract, but there's also a lot of gray area. And so even things like prorations or, something coming up in the engineering report, for example, and it's, maybe $5,000 or $10,000. If a seller or buyer treats that as if that's like the end of the world and the deal's going to die based off of those small things, a seller might not want to transact with that person again. And so your reputation as a buyer precedes you. And so as you work through these transactions, if you're able to not only close the deal, but make it an easy deal for the listing broker and for the seller, then asking for a letter of recommendation from those people and providing that to the listing broker and potential seller on a deal is very strong.
So how many deals are under contract and dropped by you in the last 12 months, and why? So why are they asking that question about that?
So a lot of people have really maybe one or two sources of equity. And so if you are typically fine raising, let's say on a $10 million deal, you need to raise $2 million in equity. Well, you have a list of, let's say, 40 or 50 investors, and you go to that well to draw out money. You might get 25 of them, but then 2 months later, if you go back to that same well and you thought everybody's going to write you another $50,000 or $100,000 check, that well might be dry. So making sure that you don't have two of these deals going at the same time, and you might have 100, 200,000 in earnest money going at the same time, and in trying to raise the equity from the same group just limits your ability to close. And so they really want somebody focused on the transaction. And if you do have 5 wells to draw on, then that's fine if you have 2 deals going at the same time. But these transactions take 45 to 60 days, and they take focus and a lot of paperwork sometimes, and a lot of energy, a lot of inspections, a lot of equity calls, a lot of webinars. So trying to do 2 of those sometimes can get very tricky. And what we started with, execution certainty, is slightly reduced when you start diluting your time across multiple deals.
So they're going to ask questions like, do you currently have any outstanding offers? Circle 1, yes or no. Do you currently have any other properties under contract? Circle 1, yes or no. And then, do you manage your own properties? Why is that important for the seller to understand that too?
So this is an interesting question, because on some of the deals recently, sellers have wanted, they are a third-party property manager, and they have actually wanted to maintain management of the property. And so that has become an advantage for some buyers by saying, yes, we'll buy the property. We understand that it really needs, let's say 3,000 or 4,000 a door on the interiors. You're doing a good job managing the property, and we're fine keeping you on. And that manager is still going to get the fee. So a lot of these owners have their own property management companies as a separate arm. And so that is an advantage for them. And so when you're trying to separate yourself as a buyer, that can be a distinct advantage. But then also, this question also goes back to who's on your team, right? So do you have a reputable third-party property management company that the listing broker already knows and that manages properties like these, right? So if you are out of state and you're coming to Texas and this is your first deal or second deal and you think you're going to self-manage a 200-unit deal, it might be not the best time to do that. So it might be better to have a third-party property management company, because a lot of these listing brokers understand that, Fannie Mae or even Freddie Mac are going to require third-party property management, and you're not going to be able to self-manage that deal from California or Chicago.
Yeah, they would just want to make sure, again, going back to the execution certainty, that part of the decision tree, besides you as the general partner, the KP in the deal, you're also going to have your equity partners, but part of the decision is going to be part of the management company and how they underwrite the deal. So have you given, the seller wants to know, have you given the most updated financials that we gave you to the property management company? And have they done their analysis? That's probably a critical piece, because, again, they're part of the decision tree. And they also want to know is, have the principals involved reviewed the underwriting? So have they reviewed the underwriting, and have the principals toured the property and walked vacant units? Why does the seller want to know that?
So a lot of times people, especially not local, they will want to put in an offer on a property and they've not even toured it. And so that does not give a lot of comfort to the listing broker, because let's say that offer is accepted or they make it to best and final, and they come out and see the property the first day of the contract and they say they're out, right? So they want someone who has put eyes on the property, walked the property, spent some time with them. So if you're going to make an offer on these deals, you need to make sure you've toured it, especially before you go to best and final. And so they want to make sure that you've seen everything that you need to see and give you access to anything that you need to see in terms of whether it's boilers or chillers or laundry rooms or amenities, because on a lot of these deals, you're going hard day one with maybe 1%, 2%, 3% of the purchase price. And so if you're going hard with that much money, you need to see as much as you can see in that 30-minute tour.
Does anybody else need to see the property before final approval? Yes or no? What is the approval process, and when will you have final authority to purchase?
So on a lot of these transactions, and we're going to talk about this a little bit later, also on the equity side of the deal, is on these syndications, you might have the syndicator, and then there might be one limited partner that is maybe bringing 90% of the money, and the general partner is putting in 10. And so that limited partner who has 90%, who is going to write the big check, maybe they haven't even seen the deal yet. And so they don't want to sign up the deal with the general partner who's only putting up 10% of the money. And then the LP comes out from California and comes and looks at the property and they say, nope, I'm out. And so that general partner's got to change horses midway through and try to figure out how they're going to go raise the equity. And so that's why the main thing that they want to look at is everybody who's signing on the deal as a KP, but then also anybody who's really investing more than 20, 25% of the equity in this deal, they really want them to walk the property, because they don't need every limited partner to walk the property who's putting in 50 or 100,000. But the guy who's writing 25% of the equity check, let's make sure they've walked the property and got any issues resolved.
I think that's a good point to transition over to sources of funds. The seller wants to figure out, where's your money coming from? Who's involved in this deal? So are there any other partners that will make up the general partner position? And who is your equity partner?
Let's start with maybe the best source of equity and then work our way down. And the best to me as a seller is, let's say I'm buying a $10 million property. I need $2 million in equity to close. And you show me a 1031 account with $2.5 million in it, and that guy needs to close in the next 60 days. That guy's closing, right? Yeah. And so if we get under contract with him, that's not a problem. So we've already got the equity raised, and it's really just a question of making sure the financing's there on that guy. So we just had this question come up last week in a transaction where I had a borrower that had $8.5 million in 1031 money. He's coming to his 43rd, 44th, 45th day to put down the three names of the properties that he's going to buy, and then he'll have another 100 and some days to be able to close the deal. But this deal had just gotten launched. So this $24 million deal just got launched, and we had to prove up that that the buyer had the $8.5 million. But the question was that came back from the seller is, who are we talking to right now? Are we talking to the decision maker, or do you have to go back to your friends? Who controls the $8.5 million? And the answer on this one was the guy on the phone that we had. He was the decision maker. So the seller wanted to hear, am I talking to the right guy? Right. So 1031 money, I think, is number one. Number two is probably a larger LP. So if you're going to have, let's say it could be either a private equity group or one particular guy out of California or New York that has written big checks before on deals. And then the third is really where a lot of people are in. It is syndicated equity. And so what that means is they're going to take that $2 million and slice it up at $50,000 and $100,000 chunks and really syndicate the equity. And how you prove this and how people get comfortable with this is two ways. Number one is showing the listing broker and seller that you have done this before. So how many times have you raised equity like this? How long did it take? And how much equity did you raise? And showing a track record of how many deals you have completed and the types of properties you've raised money for and how many individual investors are in your database that you can go out and raise money from. And then from there, The second part of that equation is really having the KPs, right? So key principles in the deal. So let's say there's 4 people signing on the deal. Can those 4 people show $2 million in liquidity? So if this deal, if you can't raise all the equity at one time for whatever reason, and the loan gets cut and now you need 2.5 million, can the KPs come up with that extra money? So showing that not only you have a track record of raising equity, but then also the proof of funds and the bank statements showing that the KPs on the deal can make up any shortfall.
2 additional questions under sources of funds. Does your equity partner need to visit the property? Yes or no? Has your equity partner reviewed the income/expenses? Yes or no?
So you really want to make sure that everybody, especially the people signing on the deal and that are the general partners, that they've reviewed the deal, reviewed the underwriting, are comfortable with it, and are comfortable writing a bigger check. So a lot of general partners want to put in only maybe 5% of the deal or 10% of the deal. Well, if there's a shortfall either on the loan or you think you're going to need more rehab dollars, then the general partners need to be able to step up and put more money down on the deal.
So what is the approval process, and when will you have a commitment from your equity partner? Just like that example I gave, the $8.5 million 1031 exchange guy. You're talking to the right guy. I'm the guy. I'm the guy who's making all the decisions. So they just want to make sure that they understand, the seller understands who's the tail wagging the dog on this deal. And is your equity partner able to provide proof of funds in this deal, the 1031 guy? Here's a statement that shows I got $8.5 million in the bank. So let's talk a little bit about financing. So
Old Capital finances a couple deals here and there. So let's definitely talk about financing. So number one, when the deal is launched, a lot of people will reach out to us and get a term sheet on the deal. And so once you've done your underwriting, sort of size the deal, think it's a deal that you're going to pursue, you can definitely reach out to Old Capital. We'll provide you a term sheet, and we will provide you how whether it's Fannie Mae, Freddie Mac, or even a bridge lender is going to look at this deal and sort of share with you the underwriting, where loan proceeds would be, interest rate, amortization, interest only, all that type of stuff. And so what they're really wanting to see on this section is not only the term sheet, but what is your track record of closing this type of transaction? So if you present a term sheet that is a Fannie Mae deal, how many deals has your group done with Fannie Mae? So if this is your first deal with Fannie Mae, they're going to ask, well, have you guys worked with the lender? Have you worked through a Fannie Mae deal? On your LOI, you say that you're going to close in 30 days. Can Fannie Mae close in 30 days? Some of the telltale signs that maybe you don't know what you're doing. So really understanding how the financing is going to be put together is a key aspect on a lot of these deals.
What is your expected LTV? What's the interest rate and terms did you model in your underwriting? And here's a kicker right now is what happens if interest rates rise? Are you in a position to bring more equity into the transaction? So why is that important, James?
So we've seen on just the last 2 weeks that the 10-year Treasury could move 20, 30 basis points on you overnight. And so if we give you a term sheet and it says 5% and you underwrite 5% or even lower, expecting that interest rates are going to go down, we want you to be a little bit more conservative and put in a cushion of at least 25 basis points on these deals. So if we're quoting, let's say on a Fannie Mae deal right now, 5%, and then we want you really underwriting 525 so that if there is a movement, this whole deal doesn't blow up. So we don't want you underwriting so tightly on a deal that you can't get there. And so the reason is if interest rates move up, that debt service requirement is higher. So higher debt service, NOI is essentially the same, then your loan is going to come down in proceeds. And so that is the key thing. The listing broker doesn't want you coming back to them saying, we want to retrade the deal now because interest rates went up 10 basis points because I underwrote the deal so tightly. The listing broker wants you to still close the deal at the price that was contracted at.
As a side note, this form is completed in best and finals, again, for the seller to get a good idea a little bit about what you are about. And sometimes the sellers like something in writing, but they really want to have a conversation with you. And so the listing agent may say, hey, listen, Paul, if I'm buying this property, I need for you and maybe your lender and maybe one of your equity partners, let's get on a call, and then you can talk to the seller directly and have the seller ask you these questions. I know we already have the answers, but he wants to make sure that you understand a little bit more about that. And one of the things I think, which is a benefit for us at Old Capital, is that not only will we get on the call with you and be your support team with the seller to kind of stand behind you, but we'll also bring on one of our underwriters too, who's actually underwritten the deal. So I think that brings a lot of comfort to the seller, that not only have we stood by the deal and we've walked the transaction, but the underwriter has already done the numbers and stands behind the underwriting of the transaction, and they're ready to go forward in the deal. So there are a lot of questions come up from the seller to the underwriter, making sure the underwriter has done their due diligence on the property too. Anything more to add on that?
So on that, one of the interesting things is, especially as you go into a new market, let's say you're in Dallas and you want to go to Phoenix or you want to go to Atlanta and you haven't closed the transaction there, but I'll put money down that we or one of our lenders that we've worked with on a transaction has definitely closed a deal in Phoenix or Atlanta. And so when we have that team on the call, we can mention these deals and talk about, recent closings in that market, in that submarket. We can pull that data up front so that we can point to those transactions, and that gives the listing broker and the seller a level of comfort that we have closed deals in that particular submarket just down the street.
It really blows the sellers away. Then we have the underwriters on the phone call, because it all goes back to the certainty of execution, making sure these deals close. And if the person who has the pen, who's signing on these deals, that gives it the authority to get these transactions approved and closed, that's the person that the seller wants to listen to probably the most, and kind of figure out if there's any icebergs out there in the water. So let's go on to property-specific underwriting. So have you reviewed with all parties, your in-house team, your equity, your management, the following? Have you looked at the rental/lease environment of the submarket? Yes or no? And what is your going-in cap rate?
So sort of transition between the financing side and the property-specific due diligence is when you go out and tour these properties, a lot of times we will go out there with you. So if you are touring a property and you want us to come walk with you, that is typically a key thing that the listing broker is also going to ask is, has anybody from the financing side seen this property, right? So you as the equity buyer have walked the property. That's great. But then also, has your lender walked the property? Because the lender, I guess they wear different sunglasses, but they look at properties a little differently than maybe the equity guy. So the equity guy might have a little bit rosier sunglasses on, but the lender looks at it and looks at, all right, what immediate repairs are going to be on the property? What's the capital reserve going to look like? What type of wiring is on the property? What type of panels are on the property? And start looking at sort of what the general demographic of the area is and figure out sort of what's in place right now. So the lender is really looking at what is the current property status and what it can become. So definitely on the financing side, remember to get your lender out there to walk the property.
Again, the seller is trying to prevent any false starts on these transactions. And so we ask these questions up front. The seller is going to want to figure out, again, what's your going-in cap rate? How did you underwrite these deals? Have you dialed in on the total rental income for year one? What's your year one real estate tax? Why are taxes so important these days, James?
So we asked for our buyers year one pro forma as well. And the reason is we want to see how you're going to underwrite this deal and how are you going to change this property, right? So if payroll is $1,200 or $1,300 a door, are you going to run it at $1,000 a door? And then if R&M is $900 a door, can you underwrite $600 a door? And is that realistic? Does your property management company run properties in that submarket at those numbers already? And can you prove that? Or do you own other properties in that market that are already doing that? And so we want to make sure that you, as the investor, are underwriting these deals correctly, because you might be offering $500,000 more than anybody else. But the way you underwrote real estate taxes in Dallas is different than maybe the way you underwrite it in Houston, right? So even within DFW, the different counties, people are underwriting taxes differently. And so understanding what county you're in, understanding the possibility of reassessment on taxes, and saying, all right, well, in this county, I'm going up to 85% of the purchase price on the assessment, whereas in another county, I might use 75. And understanding the rationale behind that is key, because they don't want someone coming in and getting hit, underwriting 75%, and the appraiser comes in with 90 in the first year. And that cuts not only the value, but your loan proceeds.
And those are real life examples where property taxes, at least at this period of time of this year, is that property taxes have gone up. And we underwrote these deals with the property taxes being lower, and now they're higher. And, have you underwritten them with the higher taxes? I know that perhaps we're fighting them, but we have nothing in writing that says it's going to be approved at the lower level. The only thing we have right now is the higher level, and that's what you're going to go into with your underwriting. Now, it may be changed in 2, 3, 4 months from now, but right now it is higher. And again, you're going to try to fight that through the courts, but that may work and that may not work. And as a lender, I'm not going to take that chance. I have to go off of what's in writing, what's in front of me, and have you underwritten the deal with these higher taxes? Don't talk to me about, after we take over the property, I'm going to start trying to get the property taxes lower. That doesn't work in underwriting.
And another piece of this on the property side is also, what other physical due diligence have you done on the property? So when you set up your tour, was there somebody who is an engineer who could maybe take a look at the roofs, understand the age of the boilers, understand, whether this property qualifies for green on Fannie Mae? What's the age of the toilets? Are there aerators? Are the shower heads been adjusted? Have you done all those due diligence items and can provide some of that to the seller? And that just shows that you're not only the number one, you understand the financing, but then number two, that you've done your due diligence up front, and that there won't be any surprises once they sign that PSA.
So if you were selected to purchase this asset, how long would it take your attorney to return his comments to the purchase and sale agreement? 1 day, 3 days, or longer? Why is that so important?
So a lot of these deals can get hung up. Let's say the LOI is signed by both parties. They agree to the initial terms, which are typically only 1 page. And now we got to take that LOI of 1 page and turn it into a 60-page contract. And so in the translation of that 1 page to 60 days, some things get a little muddy. And so this goes back to the ease of the transaction, right? So the seller is going to dictate a lot of these terms. And so the seller will typically put together their PSA on their forms and then send it to the buyer's attorney. And so the longer that the buyer's attorney sits on this and cannot get through the contract and get something turned around, is time that the seller and those investors are waiting. And so you definitely want to have your, alert your attorney once that LOI is signed that we need something turned around very quickly.
Do you show, or does the seller ask for a pro forma, and do you show that to them on how you underwrote the deal? Does that work?
I think that's a fair thing for the seller to ask for the buyer. I mean, obviously, if the buyer cannot provide a pro forma with their form, then they really have not underwritten the deal. I know some buyers will say, who cares, right? Like, why does the seller care about how I'm going to run the property? But it's one of those, you're just showing that you're knowledgeable and that you can close. And it also goes back to, how are you going to present the deal to investors to raise the equity? And how are you going to present the deal to the lender to make sure your debt gets approved?
I mean, I think the seller has a lot to risk on these deals if they've chosen the wrong buyer. Again, they're trying to get as much information out of the buying group as possible. We think that the buyer has a lot of risk in there, but there's a lot of reputation risk for the seller too, that if they cannot close on the transaction, a lot of their passive partners, their limited partners in the deal who have already kind of spent their check, sometimes will figure out that, do we have the right KP? Do we have the right general partner that's leading this deal? So again, all questions that the seller asks are good questions for the buyer to be prepared for to answer. So any other additional questions at all, James?
So another thing, I mean, we've seen this happen a couple of times in the last 6 months where a deal gets under contract, it falls out because of either the buyer wasn't prepared or for whatever reason. And now there's almost like a gray cloud over this property. Like what happened on the last deal, nobody really understands what happened when the deal falls out. The listing broker will give you an answer, but nobody really knows. And so it might be no fault of the seller. But if a deal falls out and, whether it was the debt or the equity couldn't come together, it becomes that much harder to sell that property 3 to 6 months later.
And just like what we said is that, this is a form that has to be, it's completed from the buyer to the seller. But then if you go on a call and then the buyer and seller actually get on the phone and talk a little bit, it gives an opportunity for the buyer to ask the seller some questions. And what would be some questions that the buyer would ask the seller, James?
I mean, it's really going to be deal specific. I mean, to me, it's sort of like you're in a job interview and your job is to ask questions to show that you know what you're talking about. And so if you've done your research and you want to ask them some specific questions, I want those questions to be more around the property and more around anything that maybe they could help you with in the future. But I mean, you're really just asking questions to show your knowledge and also show your enthusiasm. So a lot of people, they want to work with people that they know, like, and trust, right? Going back to that statement. So if they get on a call with you and you don't seem to care about the deal and you're just very nonchalant about it and not taking it seriously, I mean, that's going to come across.
It absolutely will come across that maybe you haven't dug into the transaction deep enough. You don't care. You haven't put your team together. And again, if you have not closed on a deal yourself, that's what the importance of building a team, because these transactions can be complicated, but you need teammates and team members, whether it's your attorney or it's your physical engineer that's going to work for you to make sure the property is actually working. It's the roofer, the plumber, the electrician. It's going to be your banker on the call. You want to put together your team. And again, if you haven't done a transaction, you're going to want to find other team members that you can bring on that may have done one or two, and you're going to use their ability that they've closed transaction in the past to help you get this transaction done. And I would be open and forward that, I have not closed a deal, but my partner has closed a 200-unit deal over here and closed a 775-unit deal over there. So you start building your team, at least over the phone. Anything more to add on that?
So here in DFW, I mean, there's a couple things that are sort of the standard. So a couple things we haven't mentioned is really getting to this best and final process is the amount of time you have to close. So typically 45 to 60 days is standard from contract execution to close, but then also the amount of hard money. And so as you start, it's probably 1% to 2% on a majority of the deals and might even be higher on smaller deals. So there's a lot of money at risk once you start this process. And I think as you think through this form, it really helps you to start building your team and thinking about how do you answer these questions. And if you can't answer that question or you don't have a good answer to the question, how do you get better, right? How do you look at these, investor forms and really start filling them out? And what I've seen is I've seen buyers be on a call with the seller on their very first deal, and they might blank on a question or two. But as you do more and more, you get better and better. And so definitely, fill out the form. I've had buyers send me the form ahead of time before they send it in to the listing broker for me to review and really just get an idea of what they're going to say. And we see a lot of these forms and we understand sort of what the quote unquote best answer is and how to phrase things, and then maybe add stuff that maybe you're so close to what you've done in the past, but I see it from sort of an objective view. And so a lot of times I can add things in there that will help you present your case better.
That's a great point, James. I mean, all the guys at Old Capital can get on the call with the seller, just like what James is saying. And since we've done a ton of these kind of calls and you've only done one or two or three or one, the reasonableness of the questions and how it can be reasonably answered, you need to have somebody who's done it a long period of time. Again, it's a great time to ask the questions of the seller. One of the questions that I always like to have, because again, when they probably bought this property back 5 years ago or 6 years ago, they probably raised a ton of money and they were implementing their capital into the property and raising it from a value added up to a stabilized property. I would just ask them, if you had an extra $100,000, where would you put the money into? So they own the deal, but maybe they don't have an extra $100,000 or $200,000. I'd ask the buyer, where would you put money into? What do you think the property needs to bring it to the next level? And I think most of the time, James, would you agree if they would be pretty open and honest?
Yeah, I think a question like that is really a positive question. So you don't want to sit there and really berate the seller with questions around, when I was walking by the pool, I noticed a leak, and, none of those questions really need to come up on the interview. You really want to focus on things to improve the property and how this transaction is going to be an easy transaction.
You just want to get it over is that you're the easiest buyer to work with, and you have the highest confidence in getting the deal closed. Again, the seller doesn't want to be embarrassed in front of their partners, and you don't want to be embarrassed in front of your partners. So everybody works together better as a team. So some great information, James, on our new session called Coaching and Counseling by Old Capital. I like that one. So let's use that again.
So yeah, we'll be back definitely. Even if you want us to send you a form or one of these, definitely reach out, contact us on the Old Capital Podcast website and just request the sample investor form, and we'll be happy to send you, it's probably 2 or 3 pages of the questions that we've gone over today, and we'll send you that, and then you can actually, prepare it as if it's a real deal.
Hey, some great information, James. Thanks for spending some time with us in the podcast today. And so don't forget, if you do like our podcast and you think it has some quality information in there, go into iTunes and give us a 5-star rating. We would appreciate that. We're always looking for better reviews on some of the great information that we're providing to the apartment investing group. So anything more, James, before we cut it out?
I think that's it. Thanks a lot for having me, Paul.
All right. Thanks, James. Again, James Eng with Old Capital. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.